Europe's common currency, the euro, has hit parity with the US dollar. What's happening? What does this mean? Is the euro going through an
existential crisis?
How did this happen? Well, a couple factors, but mainly a combination of 1, Russia's war in Ukraine, and 2, the European Central Bank or the ECB's sluggishness in raising interest rates on the back of rising inflation.
Inflation resulted.
It's the first time the currency has sunk to that level in 20 years. Around that time, it was just a little baby fledgling currency. But what does that mean if the ratio hits 1-to-1 or even lower? Who wins and who loses? It depends on who you're asking. It's good for European exporters because their products become cheaper relative to US-made goods. And the same for Americans traveling to Europe. It's like the euro is on sale. On the flip side, a weaker euro makes imports like oil and gas more expensive.
First, we have to pay for higher oil and gas. External accounts go into deficit. But after a while, our exports increase, and then also we get more jobs.
Some policymakers have also highlighted a weaker euro as a risk to the ECB's goal to return inflation to 2% over the medium term. Generally, that's what economists consider the sweet spot for inflation.
My colleagues and I are acutely focused on returning inflation to our 2% objective.
So if the ECB just starts hiking rates by a lot, the borrowing costs of the more indebted countries risks spiraling out of control if investors begin to question their ability to sustain debt loads. Now, is there anything that can be done to turn this around? Remember when I said earlier, the European Central Bank or the ECB's sluggishness in raising interest rates on the back of rising inflation? Couldn't the ECB just start hiking rates to prevent too much pain for Europeans? I mean, that's the plan, but raising rates is harder for the ECB than other central banks because different countries in the Eurozone have different levels of debt. But how low can the euro go? Here's what some analysts are saying.
And under the scenario of a complete gas cutoff, I really wouldn't say 95 would be unreasonable.
Euro could fall to 80 US cents, according to Deutsche Bank.
Obviously, the difficulty of managing a monetary union with a wide range of economies emerged during these times. But if history is any guide, the euro will survive as it has done so in the past. It's just a matter of how much that will cost Europeans.
Together we are stronger.
That's the hot take. Thanks for watching.